Hey, what is up everyone? Welcome into the channel. My name is Brent with Investing on the Go. Today we're going to be covering living out of a brokerage account, breaking down the entire stock market portfolio, real estate portfolio, and breaking it down going into 2026. So join me as I share my personal finance journey of living out of a brokerage account. I like to do these every once in a while to hold myself accountable for my investments, keeping myself in check, making sure that I'm progressively moving forward, regardless if I have W-2 income coming in or not. So in this video, we're going to be breaking down a few things. So number one, we're going to go ahead and discuss some recent updates to my portfolio. And number two, we're going to go ahead and go over the full list of covered call ETFs that I'm currently invested in, along with my other growth stocks and ETFs, and then breaking down the comparison between the stock market portfolio and my real estate portfolio to give a total picture of the current net worth holdings of my portfolio while rolling into 2026. And then finally, some plans of what I plan to do kind of going into 2026, some of the things I'd like to accomplish by the very end. So if you guys are curious about living out of your brokerage account and want to learn more about building wealth, then definitely subscribe, smash that thumbs up. And I do have a completely free Discord server if you guys have any specific questions. Check the pinned comment down below. You guys can join, ask questions in there. I've got a lot of direct messages in there. And I do post in there occasionally, trying to get information in there when I can. So definitely check it out, and some other referrals and other links down in the comment section below. So with that said, let's go ahead and get into the video. So let's go into some recent updates. So last week I made a video going over, I sold out of SPY and QQQI at the very end of December 2025, December 30th, 2025. During that whole December process, there was some falling out within the market. So I took profits and sold going down. I didn't quite sell at the middle. I sold more towards the bottom. When I repurchased, I actually accrued a loss. So I went ahead and instead of buying back into my SPY, my QQQI, I just went ahead and liquidated those for 2025 so I could write them off for my taxes and for 2025. Now I had to be out of those funds for at least 30 days or longer. So I was looking for other areas of investment. So that's when I found iSpy and IQQQ. We talked about these last week, but going into this week, the second week of January, I ended up deciding to sell out of these. So I completely sold out of my iSpy and my IQQQ. You can see here that we did make a profit. We made $805 profit on iSpy, $867 profit on IQQQ. Now, this difference right here, we have an increase of $1,672 of profit that we kind of netted. And then roll it into this week, I decided to go ahead and make some new purchases. Now, starting, I think this was just a few days ago, order date on the 13th. So a little bit before the market fell here on Wednesday, the 14th of January 2026, I went ahead and purchased T-SPY and T-DAC. Now, the differences here is in performance, which is the main thing I wanted to capture. I'm very big on investing into QQQI and SPY, but I couldn't roll into these right away, and otherwise I'd wash out my sale. So I wanted funds that were comparable to my SPY and QQQI, but still had a good yield where I could generate enough income on a month-to-month basis to cover my monthly expenses. If we go back to our command center here of how I'm currently living out of my brokerage account with no 8 to 5, everything is fully funded from the dividends that are coming in and some of the miscellaneous income that I'm generated from affiliates referrals, my other YouTube channel. This YouTube channel is almost monetized, and I have a real estate business on the side that sometimes funnels capital into this account. I'm trying to get that to a specific amount before I leave it at a certain amount and then start funding everything excess into my brokerage account to begin growing my month-to-month income larger than what it is today. Now, as everything hits that brokerage account and it goes in, our daily expenses and bills go into the credit card at a 2% cash back. I pay down the credit card, my mortgage, my car loan with funds from those dividends on a month-to-month basis, and then any excess gets reinvested back into appreciating ETFs, where if I'm investing $100,000, I want to keep my net asset investment, my $100,000, grow it a little bit is what I'm looking for, while getting some dividends in return. I don't want to see a loss of 10, 20, 30, 50%, as some of these other high yield funds are out there and have done over the last few months. I'm trying to avoid those very much. So that's just a breakdown of what we're trying to accomplish here with this portfolio. So by investing into TDAC and TSPY, the performance difference here, we'll see here. So I went ahead and swapped these to ProShares here recently. And the ProShares one are here in the blue and the green. And now let's just compare the equivalent. So let's just look at the SPY-I and the iSPY. The Neos came out on purple for the Neos at 18.48. So this didn't quite perform the iSPY. It didn't have the performance of SPY-I, but I was looking short term. But even if I want to look short term, I still want to capture something that's going to give me something of equivalent in terms of total return and dividends, just in case I want to stay in these for a prolonged period. So this is where TSPY came into the mix. When adding TSPY into here, you can see that Tap Alpha's TSPY actually outperformed both the SPY-I and the iSPY in total return. And if we take a look at these in their yield, let me go ahead and get rid of total return here and just look at that dividend yield. We'll see that the TDAC here, Tap Alpha, I'm looking at total, I'm looking at percentages right now. If we take a look at not percentages here, so Tap Alpha has a dividend yield of 13.75%. SPY-I has a dividend yield of 11.6 currently, and that ProShares one that I had held for a short term time has a yield of 8.46. So these are much more comparable on a month-to-month basis. If I'm generating extra dividends and have excess, that's fine. I will reinvest the excess back into the stock market in order to buy back more shares or invest into other funds to kind of diversify a bit between these covered call funds. Just in case one of these doesn't have the best performance at the time, I can then split capital into ones that are either down and doing better, but just depending going forward. So there's comparisons of the S&P 500 covered call funds. So TSPY outperformed them. Now, again, comparison between the QQQI, which is that Neos fund that I enjoyed, and the iSPY. So very small competitive here, right? This is just a yield. So QQQI has a yield of 13.73. The iQQQ has a nice yield of 10.28, but we mentioned TDAC. Actually, TDAC did not appear in here. Now, TDAC actually pays out 0.37. Let me bust out the calculator here. So if we take the dividend payout of 0.3741 divided by the current share price, I'm not sure if this is the share price as of today. I don't believe it is. I think it came down a bit, but 26.48. That's going to give us a yield of 14.12. So when we're comparing these, 14.12 is very comparable to the Neos QQQI. So I'm going to get a dividend payout and a higher yield similar to that. Now, if we're looking in, let me go ahead and bust out the price here. Total return normalization, and we're just looking at total return here over the last 1 year, right? Is that the 1 year total return? That NASDAQ must have pulled back quite a bit, huh? Okay, we can see here that Tap Alpha has a 1 year rate of return total with with dividends reinvested of 10.62. The ProShares NASDAQ has a 9.05, and the Neos NASDAQ has a return of 7.83 just in total return. So that's a little bit of a different picture, right? So we had still Tap Alpha at the top. We're just looking at price appreciation. ProShares came out on top here. Then the Tap Alpha, and then the Neos. This is just price appreciation, right? So I thought these were interesting. I think these are going to be able to provide a close enough yield and payout in dividends similar to my SPY-I and my QQQI, while still maintaining a good rate of return moving forward if I happen to not want to move out of these. So currently, My portfolio as of today on the 14th of January 2025, the covered call portfolio is holding BTCI, which is the NEOS ETF Trust Bitcoin High Income, the IAUI, which is the NEOS Trust Gold High Income. Here is the IWMI. I feel like this one has done really good. I don't have the performance in here at the moment in the screenshot, but it's gone up a good 2% or so since purchasing it just last week, and I'm really happy with the long-term trajectory of this as rates are coming down and investors are moving out of the uh, tech-heavy SPY Nasdaq, and they're looking for not only growth but kind of safety. They move more into these smaller mid-cap companies, which the Russell 2000 has. And then we have the new additions TDAC and T-SPY that have been added into here, and there's some information in there as far as the ex-dividend dates, and I believe, I'm not sure what these dates were. I think that's the SEC yield, but those are the updates within the portfolio. Now, jumping into number two, taking a look at our entire stock market portfolio, just not the growth side. So actually, these are a little bit older. So breaking down the entire portfolio, just like I said, I sold out of IQQQ and iSpy. We had quite a few shares in there. These actually prices came down as of Wednesday, right? Prices were coming down. I sold out of these on Monday as they were kind of looking like the market was kind of pulling back. So I went ahead, liquidated, looked for an opportunity, and that's when I moved into the TDAC and T-SPY. So in another account, if you guys have tuned into our $1,000 investment challenge, I set up a challenge from May 2025 to December 2025 to invest at least $1,000 or hit our $1,000 within a account over at SoFi by investing $25 every week. It was just kind of a powerful thing. I wanted to showcase to my son just how powerful $25 goes. If you go out and walk a few dogs in the neighborhood, they pay you anywhere from $5 to $10 for walking their dogs. You get a couple dogs that you're walking every week. Or, you know, he washes car windows, and he likes to go out and do like miscellaneous things, and just generating $25 a week can get you $1,000 saved up over the course of, it took us, I think, 36 to 38 weeks to get $1,000 in there. So this is just a nice little thing for him to see that whole progression and how powerful just $25 goes. But anyways, I have plans for this. We'll talk more plans here in the future in this video. And then as we scroll on down here, I have two different accounts. I didn't put the screenshot of the other account of VU, completely forgot there. But we hold a good portion of VU as another growth ETF. So we have about $50,000 to $55,000 of VU as of today. So sitting in a separate account that is just tracking the S&P 500. My other biggest single holding was Meta. It was up a lot more than it is today. Right now, as of close on Wednesday, Meta's actually down a substantial amount. I was supposed to set stop points at around its support was around 634, 635. I forgot to set my support cells. It broke on right on through that here into Wednesday. I believe Meta's down to around 615 to 620. So this percentage, don't even bother looking at the cash value of this. It's gone down quite a bit. But Meta is another one of my biggest single holdings, and continue to hold that one in terms of diversification and kind of enjoying Meta there. And then this one down here, this is my old Roth 401k. I'm still looking to roll this one over into a Roth IRA or IRA, because a portion of this is contributions from my old employer, and my old employer rolled their contributions into my Roth 401k. So when I transfer this over, I have to split the difference where my contributions go into a Roth IRA just fine, but their contributions into my Roth 401k have to be rolled over into an IRA. But so this date right here, I wanted to include in this screenshot and video that back on February 14th, 2025 was the last official day that I went to any sort of W-2 job. I was told earlier in 2025 that I was going to be, laid off because my position was going to be ending. Then they gave me that date saying, hey, this is your end date. If you would like to apply for another position within our company, you can go for that role, but there's no guarantee that you get it. I just decided to go ahead and part ways, knowing that I had a plan in place, and this was the plan that I was going for. So, as of that date on February 14th, 2025, my portfolio was sitting at $84,780. That tariff news took place between February and April, and by the end of December 2025, you can see that our portfolio now sits at $92,200. That is a capital gain of $12,329.12. That has just happened just through appreciation. I'm not touching it, I'm not fiddling with it. This is following the Fidelity Large Cap Growth Index Fund. This is a mutual fund that you can actually invest in at Fidelity, and it has a much lower expense ratio than buying into VU. I think the expense ratio on this is 0.01. So they're very low if you're just looking for something long term to hold on to. And that is the breakdown. When I was recording this video before, I was kind of getting snippets there to kind of break down the accounts. Now, putting it all into a single screenshot here, this is our total holdings right here. So as I said, I hold BTCI, IAUI, the Gold High Income, IWMI, TDAC, and T-SPY are new additions. I sold out of my SPY-I and QQQI, as I said, and I removed iSPY and IQQQ because I do not want to hold those in the future. I eventually want to diversify between the TAP Alpha and the NEOS high income funds, and that'll be done in the future. As I get paid out more dividends, I'll begin to funnel more into SPY-I or QQQI, and then begin to balance these out a bit between these fund managers and such. And then we have Meta. We have 114 shares of Meta, our Fidelity Large Growth Index Fund, and VU. So my individual covered call account that I'm using to currently fund our, living out of a brokerage account currently sits at roughly 337,182. It has pulled back a bit in the as of today. Market has definitely pulled back a bit, and I've also had a little bit extra on bills going into, I think it was December. I went over budget. I've been trying to really budgetize my January, how much spending we're doing here in January, and trying to better in line. So I went a little bit way over budget in December, but really trying to cut it back. So I'm hoping to see this sum continue to grow and grow with appreciation going into 2026. And then in terms of our growth style investments, we're sitting at $213,611 of just specifically growth related funds. So as of today, on the 14th of January 2026, our stock market portfolio sits at $550,794.52, making up 50.54% of our total net worth. Within, I always like to say we because it's me and my family, right? I always like to say it that way. And then, so that is part two, where we're kind of breaking down the stock market portfolio now. Jumping into correlation between stock market and real estate side, my real estate portfolio has 3 holdings. I have my main portfolio, my main property. That's the property that I live in right now. I locked in at a very healthy rate of 2.75 back in 2020. When we moved back into the States, it was back in 2013. I had just got out of the military. I had close to about $100,000 and some to my name at that time. Getting out, I had nothing. I came from overseas in Japan. I had been living in Germany prior, so I spent nearly 10 years overseas with no house, no car. I had basically a mattress, a entertainment system, and I think a bunch of clothes. That was it when I moved back into the States. So I had to buy a house, my very first home. I was able to get it pretty good at a reasonable price. We lived in it from 2013 to 2020. In that time frame, was able to buy my first property back in 2013, invest the rest, and let it ride up to a sizable amount, taking a portion of that out of the market in 2018 when I wanted to diversify into real estate. So 2018 rolled around, I bought a single family home for $90,000. It was listed at 110. I offered them 90, and I gave them the reasons as to why. When I walked through the property, I went through and noted all the things that I felt needed to be fixed. They agreed, and they sold it to me for 90,000. In that time frame, it has appreciated a sizable amount. It's got a net asset. I didn't want to include the current market value in the loan because sometimes when you are online, you are asked questions as far as, hey, you have a loan at this property. How much do you still own on it? So I don't want to give these specific numbers out as far as current market value and loan at the moment, but the net asset value from my current market value and the loan remaining on it is 145,1818. In that same time frame, there was a duplex that popped up on the market that was incorrectly listed. It was listed as a 2-bedroom, 1-bath. I saw this. It was listed for around $86,000. I went to the property, once again, walked through it and made some, I have a book that goes over the real estate breakdown of different prices and stuff like that. And I kind of broke down how much I would have to pay to get specific things up to where I want them to be able to rent it out as a reasonable level. And I gave them my counter offer. It was $78,500. They accepted it, and I was able to buy this property that was listed as a 2-bedroom, 1-bath, but it was a duplex with a fence split in between. So it's 2 separate units with 2 bedrooms, 1 bath for $78,500. I took both of these properties, I fixed them both up, putting between $10,000 to $15,000. Went to the bank after I had tenants in them and refinanced them for around $130,000 at the time. And then I was able to get a loan on these, pulling a good portion of my own capital back out. I had to leave a small little bit of off with these properties. We've talked a little bit about them in the past, but for the most part, all my cash was returned back to me, and I invested it back into the stock market between end of 2018 and into 2019. Then between 2019, I continued to hold in the stock market, mostly invested into VU or SPY while holding on to these real estate investments, and they continue to all grow and grow and grow. It wasn't until 2020 where real estate essentially kind of flattened out. If you look at your own property out there, if you guys own a real estate property, you'll see that as of 2022 up until here, 2026, real estate has essentially gone nowhere. It's gone like this, like up, down, and gone nowhere. So between our main property and my 2 rentals that I rent out, they're essentially pretty much always rented out with a tenant. I recently looked at rent rates for my single unit, and they are right on schedule where they need to be. And on my multifamily home, I'm actually a little bit under where the local rent should be. And I need to go talk to the property manager and say, hey, I'm covering a couple of utilities. I feel like I need to bump these up to meet their local standard of rent. So I'm feeling like going into 2026, that's something I have to reach out to them and discuss with them. But between the 3 properties that I'm currently holding, the current equity net-wise is $539,090. Now, the bad thing about real estate is that it is not very liquid. I can go out there and do a HELOC or a home tap, but that is just not something that I've been wanting to do. I have considered liquidating out of my single family home. I got it fixed up. I got brand new siding, paint, recently replaced the car space, and did some trims and pruning and stuff like that. And it's at a reasonable level now where if I were to sell, pay back the loan, pay the realtor fees and agent fees and all that, and then pay down the loan, I would still net wise after taxes have anywhere from $100,000 to $120,000 after taxes returned in my pocket, where I could invest it into the stock market and get a reasonable rate of return. If I invested it into T-SPY, TDAX, SPY-I, QQQI, right? This would create a less hassle and a more controlled, more liquid way of generating income with. And that was something that I've considered going forward. But like I said, just because it's sitting at net asset values of this, when you sell, you have to take things into consideration, such as fees for realtor and all the other miscellaneous fees that it comes when you're selling a property. You got to pay back the loan. You got to pay down taxes between how much you've actually sold it for and what you purchased it for. You got to sell taxes on that. And this number right here, while it looks big, there's a lot of taxes that come out when you do end up selling it. So That's the unfortunate thing. I've seen a lot of YouTubers out there recently going through and dumping their real estate. And while it would be nice to sell out of these, it does take a big hit there. So currently, we're sitting within our stock market and real estate portfolio at 1.8, 1.8, 1.9 million dollars of total net worth, making up 100% of our total net worth. Now, I didn't include things like cars. I don't have my savings account in there because I don't want to. Suppose I could include those in there, but I don't include the cars because I don't feel like they're not appreciating assets. They're depreciating assets. They're actually taking money from you and having to pay car insurance and all these different things with them, right? And then savings, I like to have a sizable savings on the side just because of my real estate business. If I have any vacancies or maintenance or something falls in because the snow is really heavy on the house and something on the roof falls in, I got a text message I had to replace that here recently. So there's always things that can happen. That's why you want to have money flowing in and capital on the side just in case you do need to fund these types of repairs and maintenance. So that is currently where we're sitting at the very beginning of 2026. I think it'll be really interesting in the future in 2027 where we're going to be at while we're living out of our brokerage account with no 8 to 5 income. So in terms of plans going into 2026, my biggest plans going into 2026 is one, I want to continue to look for opportunity with different types of covered call funds. I'm just continuing to diversify, right? I not only want to hold NEOS ETFs, well, a lot of the NEOS ETFs are really good. Funds such as from Tap Alpha have also been out there and recently, and I haven't seen a whole lot of coverage. People are looking to buy into these crazy high yield ETFs that track either individual companies or do some insane leverage style investing. I just don't want to do that. I want something that has more control with it. So that's why I'm sticking to these very straightforward ETFs that track the S&P 500 or the NASDAQ or the Russell 2000, right? Now, I do have my growth funds that I don't need right now to live with or use in any sort of way. So those are continued to invested into high growth and normal market returns. And then other plans here in 2026, I want to find a good way of tapping into my equity. If I could get in here, I don't want to use Home Tap. Home Tap, they give you a percentage of your current home's net worth, net value now, so that in 10 years from now, whatever your home is appreciated with, they are basically, they own 30% of your future home value. And you don't know how much that future home value will be. So I don't want to do that route. I will stick something maybe with a home equity line of credit, which I've used in the past. So I might end up doing some style of that, or if I can find something else to kind of tap into the equity, then I could pull the equity out without having to refinance these loans because my main property is at 2.75. My rentals are around 4 point something to 5 point something, just very low, and they're manageable because I bought these for under $100,000 and refinanced them for anywhere from $130,000 or less. So they definitely bumped up then in the last 7 years that I've had them. So I think that's it in terms of this video. We went ahead and discussed my entire stock market portfolio, starting with our covered call portfolio. Then we moved into our total portfolio, which included a lot of our growth related companies and individual funds. Then we broke up the correlation between the stock market portfolio, my real estate portfolio, and the total net worth number that we're rolling into 2026. And then recent plans going into 2026. I still want to continue to grow out this portfolio. I'm hoping that by next year, we will be, above $600,000 in our stock market portfolio, either from appreciation within this market, within the stock market portfolio, or by excess capital being rolled in from my miscellaneous sources of income from my YouTube channel. This YouTube channel is about to be monetized by the very end of January, and we'll cover that in a future video when we go into our budgeting stuff. As I hit another number within my real estate business and I have excess capital that I no longer want to have, say I want $20,000 in savings just kind of sitting there as a buffer. Anything excess over that, I will be able to fund over into my high income or my high income portfolio and just begin to generate my monthly income on a higher month to month basis, and then grow that and roll that into more, right? So that's kind of the plan going into 2020. So let me know, guys, down in the comment section below, what are your guys' plans going into 2026? Do you plan to live out of your portfolio at all going into this year or here sometime in the near future? And let me know what your guys' New Year's resolutions are down in the comment section. Once again, I have a completely free Discord server down in the pinned comment down below if you guys would like to join that and ask any questions in there, and also check out some of the goodies in the pinned comment. And with that said, I would really appreciate if you go down below, smash that subscribe button, give this video a big ol' thumbs up. Hopefully it wasn't too long and it was fun. Again, I make these videos for entertainment and educational purposes only. This is my own personal finance journey. It is not everyone else follows this exact same journey, right? We are all individuals living the life, and this is just my stepping stones, kind of sharing it here on YouTube. So thank you all for watching, and I will see you guys in the next one. Bye-bye.